Yo, what's going on, world? What's going on, Facebook? Everybody catching us live on Listen Vision Live. It's your boy, Jay DeCosta.
It's your girl, Katniss.
And I'm the one and only Tay Jordan.
And together we are
The
the
Nitty
Nitty Gritty. Look, we got a great show lined up for y'all today. I know I say that all the time, but you know what? The content be real on here.
Yeah,
You know what I'm saying? Support black content. If you're not supporting the Nitty Gritty show, make sure you do. And don't forget, you got to also support theblackjuice.com.
Yes, sir.
That's black owned last time I checked.
Hello.
You're not selling out no time soon, are you?
Oh, come on, never that.
All right then. So yeah, y'all need to go out there and support that. Make sure y'all catch that latest article that was on there, talking about the Flint, Michigan water crisis. That's still a big issue. We had some people that we ruffled some feathers out there in Alabama. They didn't like what was said on there, but facts is facts. So traction is traction. So make sure you guys go out there and support, share, subscribe, all that good stuff. There's a lot of good content coming across. We got to get the message out. But we're really excited to have Ray Pittman on. We're going to be talking about just money and social economics, a lot of bad practices, and just really trying to inform people how we can make money work for us and not to be slaves to it, or how to work around the system, because there's still stuff in place we could take advantage of. So going to be a great show. Ray is a Delaware State graduate, born and raised here in Montgomery County. Or I shouldn't say here, we're in D.C., but just over the
I
line.
was actually born in D.C. at
Okay.
Great Army Medical Center.
All right, so okay, same place, alma mater, right? Right. So and then been in the financial arena for over 20 years. Yeah. So a wealth of knowledge. We've had quite a few conversations now, and I'm really excited to have him on the show. I think you're going to bring a lot of worth and knowledge, and I think people will be able to take a lot from this. So I'm looking forward to us having some more dialogue. But before we get down to the nitty gritty of that conversation, we got to give out a to hell with and the blessings to. Quick to hell with. The whole net neutrality support, I mean, not really feeling that. I know they said that it was used that for corporations that have better communication and to be more open as far as like being honest. But at the end of the day, we're going to really pay in a lot of ways. This is going to cause people that supply internet to your homes to say, well, we're going to charge you more per the amount of gigs you're using, over the type of streaming speed you need, whether it's playing games or watching like YouTube or going on to Netflix or Hulu. They can charge you more now for those kind of premium speeds, more than what they're already charging you. They'll be able to now, people like Facebook, they might have to charge you more now, because in order for them to get premium speeds for their outlets, they may, of course, they're not going to assume that cost. They like the profits they're making, so they'll put that cost onto us. Yeah. So we'll see how net neutrality works out. Right now, just the way they're forecasting how it's going to work on the consumer, which is most of us or all of us, it's not going to work out in our favor. Yeah. So, and then, of course, shows like this that we've been thriving and building on social media, we don't really need more regulation in this space to have a voice, because then it's taking us back to just those major conglomerates, which there's only 5 major media conglomerates out there. That's only 5 people controlling how people think, talk, and relate. So we don't need to keep that small anymore, those voices. When you start talking about freedom of speech, you need everybody to come out and say what they need to say. So definitely not forward, but we'll be tracking this story as more information comes. Go to the Nitty Gritty page to see what we post. Also, got to give a big blessings to, though. Got to show some love. Alabama voters, y'all did y'all thing. Yay. I think you guys voted the right way. And just want to put this out there. It was, yes, black women showed up. 98% of the vote went for Doug Jones. But it wasn't just about black women. It was about anybody who participated in the vote. We don't want to create the false narrative that only one part or section of our demographic can change the vote. It takes everybody voting, and people who are going to vote on the issues that really count for all people, whether that's white allies, the Latino population, black men, Muslims, Asian, it doesn't matter. Color or party affiliation doesn't really matter. You have to go out there and vote. And when people come together and vote on issues that really matter, that small segment of white votes we got from women and men, that still counted towards that 1% margin he won over. So that's important to show that the whole vote, matter to everyone. But of course, we had some black girl magic. So shout out to y'all. But it took all those votes helping Doug Jones win in a state that has been always a red state, conservative state. So I'm very proud of my Alabama voters. Thank you guys for going out to the polls. And then also, we had an article posted on the page today. Check that out. There's over 100 plus black women running for offices across the United States in 2018. We had the list posted on the Nitty Gritty Show. Make sure you look these ladies up. find out the issues, see where they stand. We want to make sure there's no Omarosas in the group, or so that's still do your research. That's why you can't just vote based off color, right? You got to still see what they stand for. So definitely make sure you check out these ladies if they're in your area, see where they stand, and if they stand for the things that we care about, or if they represent how black women for the most part have been voting, they're gonna probably be solid votes to vote for. So make sure you check that out. But we're not going to delay anymore. We're going to get down to the topic at hand. We're going to talk about money. We're going to talk about the economy, common mistakes, home ownership, credit, all of that. We're going to get to it. Going to play a quick video for you guys real quick and about banking black, and then we're going to get started. And we got a lot of information coming from Ray. So real excited to get down to the nitty gritty. Jay, you ready to play that video for me, sir? All right, let it roll.
Let's clear up a few things. There seems to be a few misunderstandings about black banks. So, let's play a little true or false. The black American spending power is $1.2 trillion today. True. Solange Knowles, Usher, and Killer Mike have transferred funds to banks founded by African Americans. True. Black banks have failed to modernize. False. Black banks are unsafe and not federally insured. False. Banking black can help build better communities. True. There you have it. Clearly, there are advantages to banking black. More importantly, just bank. Economic power and wealth are important, and you deserve to have both.
Yep, so that was a video from One United Bank, a black bank, and just giving you some information on banking black. So I wanted to throw that out there, shout them out. If they're near you, they have an online banking portal that's really easy to use. You should check them out. Start up a savings account, simple checking account. But when we put money into our institutions, it gives our institutions the power to get into bigger money plays that come later. And I think Ray's going to get into some of that anyways about some of the things we could talk about. Really, to get the conversation started, I wanted to talk about common money mistakes, right? Just trying to get through some of those. There's a lot of different ideas about, savings and investments, IRAs. So just kind of want to kick the conversation there. And Kat, Tay, maybe you have a conversation. Not a conversation, but a question around that. Mm-hmm. And we'll just get the conversation started there. Yeah.
Okay. I guess common mistakes. Well, they always encourage us to put all your money in the savings account. Is that something that you would recommend for people who are trying to save? Should you keep cash? Should you use only a credit card?
Well, it's interesting you say that because when we talk about money mistakes, I think the first money mistake that preempts everything is the fact there's no financial education. Just not getting any financial education is a money mistake. And that's what most of our households in our community just don't have. And typically we learn money from our parents. And so we do put it into things like savings accounts, things like that, because that's what we saw our parents do, or we thought that was the next step up from the mattress, okay? So I think the number one thing is educating yourself to how the money game is played. And when you understand how the money game is played, then that will set your choices up very clearly. So I think the number one money mistake is lack of education or not seeking it. And that's just devoid. And there's a reason for that. Banks don't want you to know it. Because if you do, then you're going to bypass them in a lot of ways, particularly the savings account. There's $19 trillion sitting in the banks at 1% or less. Imagine that. So what do you think they do with your money?
They invest it.
They invest it. And if you were in the market in 08, 09, and the market went way down, and you did what they told you to do, just sit that money in there, right? By 2013, the market came back 250%. Were you a winner or a loser?
You're a winner.
Who bailed out? Who got bailed out? Banks or families?
Banks.
Who got, this is the whole game. So you got to become an owner, not a loaner.
I like that.
Owner, not loaner. Okay.
And then, one thing that we talked about it on this show, we want to bring that up because that's another common money mistake, life insurance. People don't do life insurance. especially even in our community. It's a big thing, and it's something that you see across poor people. Period. Life insurance, a simple thing to do. I know you have some thoughts on that as well.
Well, this is a fact. 85% of widows under the age of 50 have to move out of the house they live in within 12 months, unless of the father, their kids, husband passing away. You know the story like I do. Someone passes away unexpectedly, in their 20s, 30s, 40s, 50s, and within the next 24, 40 hours, they got a GoFundMe, a barbecue, a cookout, right? Right?
Yeah, I hate that so many of us use GoFundMe accounts as our life insurance policies. And you see that so often. Why do you think that is? Why do so many of us choose not to insure ourselves? And we would insure our iPhones, our Androids, but we won't insure our lives.
Right.
Preach.
It's interesting you say that because what is your number one asset, you think, Tay?
My number one asset?
Yeah.
Huh. Put me on the spot.
There you go.
My number one asset, I mean, health is wealth. I would say probably my health.
Your health? What do you guys think? Number one asset that you possess?
Maybe my Roth IRA.
Your Roth? Okay, what do you think?
I mean, if we're talking money.
Oh, we
maybe
went
Roth.
money. Oh, my bad.
Well, I don't know. I mean, that was a good answer too, though. I mean, I don't think it was a wrong answer.
I guess it'd probably be life insurance in my IRA.
Okay.
I just started out recently, so it's only been growing for like 2 years, but
Sure.
I see the growth.
Right. Your number one asset is your income and your ability to make it.
Health.
Well, here's the thing about it is they loan you money they let you get a rent based on your income, rent a house, buy a car, buy a house based on what? Your income. So your income is your number one asset. It's not really life insurance. It's income protection. Mm-hmm. So what you have is the reason people don't do those things is because they think I'm insuring a life. No, you're insuring the income comes through the door whether you're here or not for those who care about you. And that's the number one reason is because they're not educated what it really means. Because when you do that, then you'll find a way to get the most for the least dollar.
Wow, and that's something that you're not taught. You're not really. And so in preparing for this conversation, I saw that rich people don't worry about saving money as much as they worry more about how to make more. So, and we don't see that a lot of times in our community.
Yeah, I wanted to ask about that too. While I'm sitting about it, like you get so many conflicting, I guess, advice out there. So many things out there. So many people would tell you, "Oh, save as much as you can." But you know, the return in saving your money in banks is very low interest.
Sure.
So you got other people that give you the advice: invest. So should we be doing more saving or more investing? Should we?
Sure. Well, you know, the thing about it is you got to set yourself up in a position so that if you're like building a financial house, okay, the first thing you put down is your foundation. Mm-hmm. And your foundation is going to be your income protection, your life insurance. Because see, going back to that is coming right into the savings and investment part, is most companies in the last 40 years, there's 2,000 companies, now there's barely 800. The reason is that they've given high premium, high commission, high profit, cash savings insurance, and the names of whole life, universal life, variable universal, and they sell it to communities like ours so they can say it's forced savings. We're going to force you to save. As opposed to, let's educate you and let you understand how you should be saving and investing your money. Mm-hmm. Saving is a short-term concept. Investing is a long-term concept. So if you have your protection, you have your savings for your short-term, then when you start investing, you can learn and grow, and you know that today and tomorrow is here because you have the savings, right? And tomorrow is going to be insured because you're doing the IRA and things like that and investments. And that's the way it's properly supposed to be done.
Wow.
My question is, how much of an asset is your income, and how can you even get involved with everything that you just listed when you owe student loans?
Okay.
Many of us are coming out with like $70, $80, $100,000 in debt, and then I don't know if you know, but with student loans, they have you in a graduate repayment plan. So every year, the loan payment they want back is more.
Right.
Yeah, I just read recently like 23% of African Americans end up defaulting on their student loans,
Which is terrible to do because then you pay more interest.
Yeah.
Neither here nor there,
hard,
but
man.
it's, to me, speaking from my personal experience, it's hard to invest and lay the groundwork like you talked about when I have to pay back student loans, which are like consistently knocking at my door.
Well, I think what you have to realize is, especially when you're in 20s, the student loans you probably considered them an investment at the time. And when you got out and you got the job, If you did get one. Most people don't get a joint.
Wow. Yeah. True.
And they pick up you. They call you 6 months afterwards. They're like knocking on your door, letting you know. So the thing about it is I think you have to learn how to manage your debt. But the other thing is you have to be conscious. The first part of any financial game plan is how you're going to make your money.
Okay.
And when you're in your 20s, this is when you have the most energy, most enthusiasm, well, all those things. You should be thinking, how can I be making more money so that I can get a hold of and get ahead of this game? Because if you don't, if you just take the first job and you're just working at one job, maybe because you're not married, you don't have any kids or anything like that, if you're just doing that, you're just doing the minimum, and therefore you're going to continue to pay the minimum, and it's going to be hamstring you the rest of your financial life. But if you get ahead of it by saying, you know what, there's something else I could do either part time or instead of what I currently do, because I got a lot of energy. You got 168 hours. You got to monetize more than just 40 hours a week. You got to monetize it, turn it another 20, 30 hours a week, right? That way you can retire that debt as quickly as possible, have some money saved, and get yourself in a position where you're in control and you're not at the behest of the banks as well as your employer.
I have one more quick question.
Yeah.
Sorry, guys.
Yeah.
With what you just said, how beneficial was multi-level marketing? Because I hear a lot of people say that that's a good avenue to make extra money while working a job 40 hours per week.
Right. Well, you got to look at what it is. Multi-level marketing is a great system in the sense of business, but you also got to recognize it. For most people, for most businesses, it's commodity based. Okay, it's selling a commodity, and that commodity is dictated by the market, which you don't control. You want to be in a position where you're in a value-based business, where you determine your value based on your influence, your capacity, and what you can get other people to do. And so what happens in a lot of situations in multi-level marketing, it's commodity. They're selling a product that if you were selling it to your friends, they can go to Walmart, CVS for a cheaper rate. Personally, and from an integrity standpoint, I have a challenge with that. I mean, why would I sell my friends something higher just so I can make some money? I'd much rather do that. That's just my personal. But the other thing is you want to create a system where you determine your value. And when you determine your value, you can raise that as high as you want and keep it going. So it has its value, but you got to find the right situation because most of them are commodity based, which kind of sap your own personal value and credibility.
Wow, I like and then I like the way you explained that too, because I think some people get burnt by it and they become bitter.
Sure.
But people that do well. But I like the fact that you hint at the commodity base. I've had that conversation personally with people before, and I think sometimes they're not seeing the big picture that other markets are controlling that. At any time, something can happen to that organization you're part of, or that industry may not be a hot thing anymore.
Sure.
And now, if that's your only iron in the fire, you'll be broke just like that.
Yeah, and that's a challenge for most people. They're trying to get out of their situation. It's a low-cost way to do so to make some money. But again, you don't dictate the bottom line. And until you get in, you got to get in control of all aspects of your income. The earlier you do it in life, the better off you are.
True.
Nice. Another big common mistake is we talk about I won't get ahead of ourselves, but let's just talk about circle of friends. You mentioned that in a conversation we had previously about people don't surround themselves around, because it kind of goes with what you said at first. One of your foundation things is education, and then you talk about life insurance, but then circle of friends is going to help create that culture of continual learning.
Right.
So if you could talk a little about circle of friends.
Well, we always growing up, our parents always told us that who you're around is who you're going to be, right? And somehow when we got a little farther away from the parents, we kind of let that standard slip, okay? And now we're in adulthood, and the primary thing we have to do each and every day is deal with money. Either make it, use it, or however it is, or recover it, right? Okay? But so now we got to say, hey, when you have a circle of friends who are encouraging it, supporting it, that's a big deal, because like minds have creativity. I mean, you think about and I use them, if you use the big billionaires, but there's a lot of millionaires and thousandaires who did the same thing, which they had friends like Steve Jobs and Bill Gates. They had friends that they pulled in on their ideals, right? That was their circle of friends. And their circle of friends now are worth billions of dollars, millions of dollars, thousands, and you got to think about who you're around and are they about what you're about. And if they're not, it's not about necessarily cutting them off, putting them to the side, but time is money, and you never get the time back. 25 to 30 goes pretty fast. 30, 35 goes faster. I know I don't look at it, but I'm almost 50, working on that 50. That came pretty fast. But it happens. But it's all about being, and so you're going to have to make some conscious choices that you're going to say, you know what, they're not either enabling me, supporting me, or the environment I'm working with them is not going to help me be where I need to be for my family and my future financial situation. That's a big deal. We go to church. If you're a person who goes to church and you're hanging out with people who don't go to church, right? And you're not likely to go to what? Church.
Yeah.
It's the same thing when it comes to money.
Wow.
One thing I'll leave you with this is, on that part is, people have all kinds of parties. They have Tupperware parties they used to. Now they have wine parties and things like that. How about an investment party? In our community, how many times do you hear about people having an investment club? Say, hey, let's all get together and talk about investments. In the market, out of the market, or other ways. You got a lot of creative friends. And those creative friends can come up with some great ideas.
Yeah. Go ahead. I'm sorry.
I was going to say, at these investment parties that you're insinuating at, are the friends coming to invest in their friends' businesses? Is that what's usually happening?
Well, initially, it's about them learning about the basics of finances and investing. Because the only reason you manage your finances and work on your finances is so you can eventually invest. Because the investment part is going to take care of you long range. So the purpose of them is initially, and as the group grows, right, and the gathering grows, the conversation is going to grow. So initially, it's just like, hey, what's the basic that we need to do to get out of student loan debt, to pay off this and get some money working for you? Because the money you make and save in your 20s is going to pay dividends for you in your 50s. You wait till you're 30, it costs you so much more. The time cost of money, it can cost you so much more just by waiting till your 30s. So the sooner you do it, the better. But then it elevates the conversation. I have a business friend of mine. She got started in business in her 20s, and she started investing for her friends. Her and all her friends are multimillionaires.
Where did she start investing in?
She started investing in mutual funds and things like that. And so she started doing that, and she told her friends, well, this person, she happens to be white. Well, I love to hear that story in the black community but you know what? Those stories are in the black community. I don't know everybody, and you don't know everybody, but those stories are there, and we need to.
Don't hear it enough, though.
We need to get it more out there.
Sure.
Yeah.
Exactly.
Now, in terms of investing, a lot of people correlate, I guess, investing with risk, and it can be risky depending on what you invest in.
Right.
So you got obviously the stock market, 401s and IRAs, real estate. What would you suggest? Financial literacy obviously is so important, but in terms of if you're going to invest, what should I invest in? So much out there. What would you suggest as being, I don't want to say the safest, but was probably associated with less riskier?
Okay. Well, I think the number one thing is when it comes to risk, it's always time frame. You have two things. You have time frame and purpose. Right? If you're in your 20s, you put money away for your retirement, you're not touching it for 20, 30 years. You're not touching it until you're 59 and a half unless you want a penalty, right? So that's a long range. Yeah. And there's so many different cycles that happen. The 08, 09 cycle, everyone was selling their investments. Let me get away from it. Well, by 2013, it came back 250%. And now what we see, no matter who you voted for in an election, the market has returned significantly. So you have to figure out first what your purpose is, and then the time frame, and then say, hey, listen, and you get with a person who's going to show you how to, put those things in order. Because some investments are shorter term. So like if you're investing in, maybe you want to, buy a house in 5 years, you're going to invest differently than you are in your Roth IRA and things like that, or in your 401k. But you don't get education on your 401k at your job. You don't get money matters at your job or anything like that. So you're just going to have to do some little due diligence, because risk is only a perceived thought. It's all perceived, and it comes to something we were talking about the other day, which was it's emotional, right? Because a lot of people look at the market and it goes way up and they get euphoric, but then it goes down and get bad. But you know what? People who are wealthy, they consistently invest.
Yep.
Persistence and consistency is the
It's the
mark of
Warren
an
Buffett
investment. Exactly.
So I had another question in terms of like people associate the American dream with being a homeowner. A lot of people see having a home is an asset, can be your biggest asset, whereas other people I hear it actually regarded as having a liability, like a mortgage is basically a debt that you owe. So what's your viewpoint on that in terms of actually having a mortgage and owning a home?
Sure. Well, mortgage is actually, if you look at the root, and I know there might be someone out there who might know this Latin word better than me, but mortgage means to death. So the concept is you're always going to pay a mortgage. That's not true, okay? A mortgage is an asset if you're going to eventually sell it, right? And a lot of times when they do a net worth statement, and if you don't know your net worth, you need to determine first what you want your net worth to be. Then you got to set up a plan to go get it. But within that, they don't even include a house because they know you have to what? Live in the house, and you're not going to sell it. So a lot of times, buying a home can be an investment from the standpoint of you having a safe, secure way of living. You should find a way that you could pay it off as quickly as possible, because the more time you're exposed to the interest rate is the more interest you're going to pay in dollars and cents. So just remember that. It's not the interest rate that matters the most. It's how long you're exposed to it. If you pay it the way the bank tells you to pay it, you'll be exposed to a
30
long
years.
time, and you're going to pay triple the cost or double the cost. If you pay the way you should pay it, you could probably pay it off in 10, 15 years, maybe 20 years, which is going to save you significant interest. So the liability is only when you don't take control of that transaction and take control of how you pay. If you're always waiting the bank to tell you how to pay, and so a rule of thumb is if you get a loan, you want to see how you can pay it in a third or half the time. That way you can pay less interest cost, as opposed to the interest rate is only matters if you're going to pay it the same time frame. Right?
Got it.
I wanted to kind of stay here and ask,
Yeah.
what is the benefit of passing homes down in the family? For example, if you have a grandparent that their house is paid off, most of them sell it because they feel like I'm getting older, I can't take care of it. Would it be beneficial for them to then pass it down to the grandkids? Because then that way they won't have to pay a mortgage?
It's my understanding that in the Jewish culture, they do not get rid of real estate; they keep property, and I think that's the same thing. We need to take that on, because that property, whether a grandchild or children want to live there, that can become an asset, because now a income generating asset, because now you could rent it out. Especially in an area like D.C., and military, government, other people coming in and out all the time. You can rent it and generate income that can be saved up for your retirement, your kids' retirement, your college education, all kinds of things. So I think anytime when possible, you want to keep an asset and then turn it into an income-producing opportunity. Income is the number one thing we have to figure out how to get to, where we can raise our income. Because if we can start creating what we call perpetual money machines, things that make us income whether we're there or not, that's the number one thing we want to be working towards.
And it's powerful that you said that, because that's something that you hear. That's how gentrification is literally happening in our communities. What happens is the generation that bought homes, the baby boomers, when they bought their homes, then crack hit our neighborhoods, and then those neighborhoods got bad. And maybe that second generation of kids, they took those homes on. They started selling those homes and then creating a new mortgage or bill for themselves in the suburbs somewhere else. We see it all the time here in D.C. People had homes in D.C., sold those homes for, I guess it was a profit because it was paid off. Maybe it was $30,000. They sold it for $500. But these homes are now worth $2 million. And then they went and bought homes out in Bowie or Waldorf, where people may not even want to live 20 years from now, but the city will always be significant. They're giving up the land, and there's a lot of opportunities. We're like, man, if I would have just kept that house, I could have rented it. You could rent a house or break it up into multiple apartments right now in DC, call it a condo, and make a ton of money on property. But people will sell it because they don't want nothing to do with it. Sometimes well-to-do kids, like they'd be lawyers and doctors and stuff like that, and they're accountants and stuff, and they don't want nothing to do with the house because it needs some work. They're like, I don't want to go in there. I'm just gonna sell it. And that's crazy.
It's interesting you say that, because what happens is that takes You have to educate yourself on doing those things. And I think the biggest challenge, what we sometimes are, and for lack of a better term, we're unfocused or lazy about the next opportunity. We just take opportunities on their face value, and we don't do true education and seek out. There's so much information out here right now about how to make things work. I know they said this before, that if you want to keep a secret from blacks, you put it in a book. That's a joke. It's not a funny joke, but it's a joke.
It's not funny at all.
It's not funny at all, but that's what people say. And guess what? You know what? We got to prove that wrong.
Yeah.
And the way we prove it wrong is when we have opportunity to say, how can I take this to the next level? You may not want to take it to the next level, but to know how to do it and is better than not know how and just dismiss it. Those opportunities are out there, or maybe you might sell it or offload it to someone else who could benefit from it, who are in the community. I think we have to take things to the next level. We can't look at everything at face value. We got to investigate, be curious, and be thoughtful that those who are behind us are depending on us to kind of get the road moving down the road.
Yeah, exactly. And then, like we bring up home ownership, but then automatically we talk about home ownership a bit, and it's kind of like we've mentioned it already, but credit. There's a lot of emphasis on credit, but from research I've been doing and books I've read in the past, the focus of the wealthy is always income. And even when you're looking for a place, typically, as long as you have good income, you can have bad credit, but if your income is there, they'll give you a place to stay. They'll work it out for you. They'll make a means for you.
You may need a cosigner. Credit always come into play somewhere along the lines.
But I wonder if it's overdone. And I mean, and that's why we have you on, because see, like we have these two different train of thoughts. I don't think one is wrong, one is more superior, but it's kind of like, what should our focus be, or maybe some more perspective on that?
Well, go ahead.
No, yeah, I was just gonna say, because a lot of people I think feel that way. It was like, well, I got money, and don't even worry about credit. I know people that's in their 30s that never even established credit, never had a credit card, and no credit is like bad credit, in my opinion.
No, that's true.
But yeah, a lot of people feels that they have income, they have money, and they don't never have to even worry about credit, and that's so not. I think that's definitely a fallacy. But I mean, you're the expert.
Well, the fact of the matter is, you need credit for those bigger ticket items, particularly a home, a car, or a newer car that you're going to purchase and things like that. I think what you have to get there's a balance. You got to have the income is very important, but they got to know that if you're going to get the income, that you're going to transfer it to them at the beginning of the month to make a payment. So they got to have that kind of relevance. So but long range, and with any decision that we think about and talk about money, we should kind of throw it in the guise of how this works long range. Long range, you want to be in a position where you have cash, and then credit is unnecessary. I have a client going back some years. This was about 08, 09, and she had wanted to buy a piece of property in Florida, and she was in New York. And so what she decided to do is she had a $25,000 line of credit. She said it was clear. She had nothing on it. So she said, hey, take this take $5,000 for a down payment. And so she sent it over there. She got the thing moving, and she's good. She always paid her bills, always good credit. You know what the bank did next? They took her $25,000 line and moved it down to $5,000. So who controls your credit? The bank does. You don't. So long range, you got to be in position of cash, and I think cash. I heard a gentleman named Bob Turley used to pitch for the New York Yankees and the Baltimore Orioles, and he said to my business mentor, he said, cash is king. You want cash flow, and cash in the hand is better than credit, because they can cut that card that they pull that card, but they can't take your cash. They got to keep cash, right? Cash is the number one thing.
Those big bills too. That's all.
Well, we have to become money conscious.
Yeah.
We have a swipe mentality. Swipe. It's so easy. And I have a gentleman, one of my mentors. He said, carry a wad of cash, and just keep a bill, because it keeps you what? Money conscious.
It does, yeah.
Keeps you money conscious.
I never carry cash.
You know what?
My granddad always said do that. He always carried cash.
I always carry my budget when I go on trips. So
Yeah.
when I'm seeing my cash, I'm like, wait a minute, it's 2 days into the trip. I better start pulling back because I'm not
Can't get the
like,
steak.
this is my budget for the trip. So
Yeah.
that is the one time I do carry cash. I wanted to ask you about taxes. I was reading Rich Dad Poor Dad, and one of the second
Excellent
rules
book. Excellent
was that get a hold of your taxes. How important is it to get a hold of your taxes, and then what advice can you give viewers on getting ahead of your taxes? Because I, for one, I'm not ahead of my taxes.
Well, if you think about it, everyone becomes what they call a February millionaire. They get this cash refund, right? All right. And basically, you didn't get any interest on that money. You gave it to the government for 6 months to 9 months or more, and now you're getting it. So the biggest thing in getting it is being proactive and you taking control of your money as opposed to waiting for the government to tell you, hey, I got your refund for you. Okay, that's number one. And then look at tax advantage vehicles. I'm not a tax advisor, but look at tax advantage vehicles that you can start saving. There's not a lot when you're single or just starting out, but as you go along, I think the tax bill that's coming up, I'm not too familiar with it, but the number one thing is you want to find your way where you can put money away tax-wise. But then even if you're in a self-employment situation, just say use a measure, say 10 to 15%. I'm going to set aside, escrow this for taxes. You escrow for your house, escrow for your taxes, right? And so even at the end of the year, if you find yourself in a situation where you're 500 one way, 500 negative, where you might owe, that's not too bad. But if you have that savings account that you escrowed some money in, then guess what? You can just write a check to the government and be done with it. Or you can say, hey, I'm waiting for my $500 and I'll go out to eat with it. But either way, you're in control. Taking control of it is the big thing. But, you want to be in a position where you don't give as much out. So you got to play with that, talk to your tax advisor, and they'll show you some simple vehicles for where you're at for that. Yeah.
I'm not going to lie. I get a little salty or upset that me as a single woman who doesn't have kids, I can't benefit from taxes, but people who have kids, in my opinion, who make less than I do, or even more, they tend to get a lot back because they have kids.
Right.
What advice can you give someone, like I said, who doesn't have kids? Because it seems like nowadays people are using kids as an asset.
Okay.
Better find you a dependent to claim.
Well, that and child support. People getting child support, people getting government assistance. If you're not paying for anything, in my opinion, you're in a pretty good position to build if you would look at it long term.
Well, I would say first, don't compare yourself to them, because don't even worry about them. From that standpoint is figure out how you can eliminate some of your, hey, open a business. Business is a great opportunity for you to squirrel away, make more money, squirrel away some money, have some tax advantages there. You, like I said, talk to a tax advisor about that. But that's a big deal. And so you might have no kids, but you have more time. So how can you monetize those time so you can pay less in overall taxes and make more money? That could be a big opportunity for you, because those are opportunities, because people who get themselves caught in those traps, and I call them traps.
Really?
Because long range, if you're depending on someone else, the government, someone else to pay you, at some point, their interest and your interest will divert, okay? And it's usually not in your favor, especially when it's on their time scale. So I wouldn't worry about them, because if they're playing the games that there's always these margins at play, they're going to get caught at some point, and it matters nothing to you. But bigger thing for you is say, hey, how can I make the most of my money? How can I get it aside? How can I give away? There might be money. There might be charities that you want to give to. Open up an account and give away to charities. That might augment some of your tax situations. But like I said, talk to a tax advisor, but don't worry about anyone else. Kat has her lane. Run your lane.
Oh no, I mean I know. I don't want to say I'm comparing, but
Oh,
it's more so
understand.
just kind of educating people, because people are like, man, you got how much back? Because they got kids. You like shocked, like what?
Yeah, but the
So-
reason
like
they
what you
got so
said.
much back is they gave the government so much too, because remember they also gave the government a lot more money too, so they gave them a bigger percentage. But if you know what to do with your money on a week-to-week, bi-weekly, monthly basis, you can make your money work for you better for you up front. They may be a cash millionaire in February for a week or two, but you're living that all the time. And when they're 5-10 years out playing that game, you're gonna be far ahead of them in the long run.
Yeah.
I had a question. I was reading an article recently regarding the wealth disparity, the wealth gap,
Mhm.
and it says, I think it was like African American household, like the median income or the median net worth was like $1,700, and the for Latino households it was like 2,000, and white Americans it was like 100. It was over 100K. It was six figures.
Mhm.
In terms of the wealth disparity, as far as racially, how do you think we can close that? Is it because I know a lot of people think the answer to making more money is getting another job, or I'll pick up a third job, or how do you think we can? Is it getting another degree? Is it getting another job? How can we close that gap in terms of basically how can we get to the money?
Sure. It's two things. It's educating yourself and implementation. You don't just educate yourself. You have to implement. A lot of times people, they go to school to get degrees and they don't implement, okay? You don't, degrees do not equal income. It equals a salary and a job. But most people, the average person works 13 jobs in a lifetime, right? You gotta take control, we gotta take control of our income.
You said 13 jobs, the average person?
Goes through 13 jobs in a lifetime,
Oh, wow.
which means they're changing and they're having these transitions, and they usually don't have their own personal plans in order. So they have a lot of change in their personal plan. Because I got everything at the job. See, this all comes down to thinking. There's a book called Outwitting the Devil by Napoleon Hill. You may have heard Napoleon
Yep.
Hill.
Got a bunch of great books.
Yeah,
actually.
Think and Grow Rich.
Yep.
But he wrote after that, he wrote 2 years later about outwitting the devil. And the devil in the book, basically the premise is the way he gets people off their purpose in life is by getting to drift, not thinkers. We have to become more thinkers. And what happens is that's generational. Okay, so quick example. My father is 87. My grandfather was born in the 1860s.
Oh wow.
That's one generation removed from Civil War, right? His mother was the product of the slave master and the house mistress, right? And guess what? In that situation, they ended up giving her 300 acres of land. So that's my heritage. My heritage is as an owner all the way around. So we got to learn our own individual, and then we got to put that into practice. I never see my father work for anyone else in his life.
Wow.
He was in the military before I was born, and by the time he got out of the military, I came in. I just see my dad go out the door and come back in. We will set the example for our kids. My kids will be far better than me than ever I will be, and I'm better off in my situation than with my dad, just because. And we got to. That's how we make that gap. It's not going to happen overnight, and we have to educate ourselves. We do not need. I don't care who's in office. They're not for us. If it was for us, we would have been ahead by now.
Okay.
So we have to individually say, how does this American dream apply to me? What is my net worth going to be by the time I'm 10 years from now, 20 years from now? What is my life going to look like? Okay, now, how do I figure out what to do? Is that information in my community? Do I need to go to the Jewish community, the white community? Who do I need to learn from and not care? One of the things I think they make Egyptian society was that they used to have travelers. They used to go all over the world and used to bring all the information back to Egypt. And that's how Egypt was such a mecca for information and technology and all that at that time. It was because they sent people out, scouts. They used to call them scouts. And we need to have our own scouts.
Yeah.
And we have our own scouts. Guess what? You do more, people going to be like, so how are you doing that thing? Let me show you what I'm doing. Let me show you what I learned. Let me show you what book I'm reading. We have to be thinkers.
Yeah.
For ourselves individually, that's how we move to society. We don't move it by collective groupthink. Groupthink does not work. Individual initiative, motivation works. Then you inspire the next one. And when that one's inspired, they look at the cat and say, man, she's doing it, man. How you doing that, cat? And you say, you know what? Let me show you what I did.
So like each one teach one.
Each one teach one. And that's the hard thing. We want a solution from downtown here. We want the media to do it. They're not going to do anything. They're going to do what they do. Because as you mentioned before, they're owned by the who? The big banks. And they're ripping us off.
Sorry, one last thing about the implementing and each one teach one. I have a friend that's an Italian friend, and she's married, and they live with their parents to save money. And just talking to her parents, they were like, we want them to have enough money to pay for their house in cash.
Right.
Comparing, I don't want to speak for all African Americans, but I do know that it's like looked down upon to live with your parents for a long time. I know most parents say by 18, you out of here. So what benefit do you think it is to be able to live with your parents? I mean, I don't know if that's a solution, but it seems like it's working for her family in order to like get out of debt and.
Sure. I mean, if you're in a situation, let's say you're 25, and where if you were out you're just starting an entry level job in that situation, and you would normally go get a rent apartment for $1,500 a month, and your parents let you stay there for $500, you banked $1,000. You invest and bank $1,000.
Okay.
But see, what happens is you get the $1,000 difference. You like out at the club, or you're taking vacations, you're doing all the things. So you have to have a mindset. Say, listen, I'm doing this so I can do this, and then when I do this, there's an appointed time that I'm going to do that, and then when I do that, then I'm moving up. And you know what? Don't worry about what no one else thinks. That's in the social media. I know you guys had a show on social media. I got to check that out too. You got to not worry about what other people think. And that's the hardest thing, because that usually keeps us all in our own box.
Yeah.
You know, what people think about us. But guess what? At the end of the day, if you're free financially, your family's free.
Right. I mean,
and that's all that matters. Right? You know how you can tell someone's in debt? You know, your neighborhood?
No.
Oh, simple. You just drive outside 7 o'clock in the morning. Let's just say it's a family. A husband walks out the door. He goes get in the car. He's going where? To work. And he has a car 2-3 years old. You know, he probably has a what on it?
A car note.
Car note, right? Yeah. About 8 o'clock. Wife comes out the door. She has 2 little kids. Where's she taking them? Daycare. Scared. Exactly. They're taking them. Why is she having to work? Having to work. Not want to work, having to work. Because they have what?
Probably mortgage, rent, maybe.
Student loans, car notes, all those things, right? So the thing about it is debt is a cancer, and it masks itself and all these other different things. But it's a true cancer. It's affecting our homes. Our kids are not being taken care of because our families are being broken apart because we have to go to work to what? Pay what? Debt.
Right.
My mom was home with 5 boys while my dad went and worked. Why? Because, not because she had to, but because that's the investment they made. But they weren't in a lot of debt. And because of it, it helped us grow and not get caught up with a lot of things that a lot of people got caught up with. And that's a big deal. So I think the whole idea is debt is a cancer, and it will rule all of us at some point.
Why do you think, like the video mentioned earlier, just the black dollar, what was it, over $1 trillion, or 1 point something, was it?
1.2 trillion.
Yeah, the power of the black dollar is really strong, obviously. Do you think it's a lack of, or is it bad priorities? Why is it that we have such, as a people, we have such great spending power, but like we have put it to the wrong things? Like, what do you think needs to happen? Is it we need to read more books, educate ourselves better, change our priorities? What is it? Why are we so lagging behind?
You made it. You said it right there in your question. We have to educate ourselves better. We have to stop letting the media dictate to us what success is financially. We look at Jay-Z, we look at all of them, and they're doing all these different things. But there's a lot of people in our communities who are doing very well financially. I met Bob Johnson one time in a chance meeting down here out of the press club, just riding in the elevator. Very diminutive person, but a very personable person. And he knows how to deal with people, and he's a billionaire. Well, you don't see, if you walk down the street, you wouldn't know him. And there's a lot. There's a book called The Millionaire Next Door. Yep. We need to educate ourselves on what a millionaire looks like. They drive a Ford Taurus, or whatever that model would be now. They drive a Ford Taurus. Rich Dad, Poor Dad, great book, because it teaches us what a rich dad looks like and a poor dad looks like. We got to educate ourselves and start breaking the myths that the media has perpetuated us. The Instagram, all those different things, they're giving us images and showing us what success looks like, and that's not success. It's flash. They say flash and cash, right? They got 2 credit cards to pay 1 bill at a restaurant. right? You say put $2 here on the gas and you swipe your card, right? And that's the kind of mindset. They got a nice car, right? Nice ride. But, I saw a little video last night. I don't know where I saw it. Maybe it was on your site. I wasn't sure it was on your site. There was this guy driving a video. Was it?
Oh, yeah. I put it on our site. I did.
And listen, I've driven down to North Carolina. I've seen people have SUVs bigger than a house, okay? So it's perpetual. So we have to individually educate ourselves, then get new looks. There's a lot of wealthy people who have vacation homes and all kinds of different things. And they live comfortably. And you will never know they got the money. The ones who really have the most, you don't even know they got it.
That's true.
That is the one.
And they still using the flip phone too.
And because their priorities are different. And we don't have a lot of time, but one thing I want to get at, one question.
Oh, Lord.
One question that's been coming up in preparation of this show. As you know, Bitcoin is huge right now. And cryptocurrency is something that everybody is talking about. And that's an investment. And we kind of talked about this in short, but I want you to share with people, like, when they're thinking about investing in cryptocurrency, what they should consider.
Well, I think the number one thing is you got to have what they call you got to have what you need for now and in the soon future, but then you also there's money you can play with. And, going back to risk. These are new emerging technologies and new markets. They haven't had the test of time. One of the benefits of being in business over 20 years, starting out part-time and learning the business, is I've seen a lot of cycles, right? I've seen the highs and lows, and I know there's going to be some changes even in this euphoric moment. So when you look at things like Bitcoin, cryptocurrencies, things like that, new emerging markets, you have to say, can I lose that money? And can I afford to lose that money? And if you can, and you want to take a shot in the dark, that's great. It's like if you want to go play the lottery in some sense, you might say, hey, I'm going to go play the lottery, but you don't want to play the lottery or go gamble with your mortgage money, okay, or your kid's school money and things like that. You want to do it where you say, hey, this money, if I lose this, it's not going to hurt my overall long-term plan. But if it pans out, man, that's great opportunity, right? So I think you have to look at those different things. For the average person, if you're younger and you're a gunslinger, have at it, but I think you have to play a little defensive in some ways.
I like that.
Yeah.
And then, well, we're running close to time, but I guess if you give us maybe some final thoughts on the black dollar. We talked about that in short. Just, maybe integration versus segregation, or just, people asking for the hookup versus, making sure you're supplying equal value.
Right.
You had some thoughts on that, and I wouldn't mind you telling some of our people about that before we close out the show.
Sure. I think the number one thing is the black dollar, and when I say the black dollar, that means it's generated in the community, okay? The challenge is it spends in other communities the same way, okay? Therefore, the value that we get in other communities, we should get the same value in our community. So there should be no hookup. Okay, like if someone comes to me and say, Ray, hey, I want to get something for you for $10. It's $10, but I want you to hook me up for $5. Well, basically what you're saying is you want to take $5 out of my children's pocket. I don't think so. That's not how this works. If you want me to give you the same value, then that's fair. Then that gives an incentive, because there's been too many challenges with people not giving equal value or asking for something at a below market price, and it's just not good. So what happens is a lot of people say, well, I can't do business with my family or friends. No, if they love you and they care about you, and you'll give them value, and then secondly, they want you to earn what you need, because that's going to take care of your children and your wife and all those different things. So I think equal value, we have to have integrity in our community, that what we're going to get from one another is of fair and equal value if we're going to get on our side. And that's when you're going to see the black dollar circulate a lot more around. And I think the other thing is, and I'll kind of end up on this, you got to determine about your income. There's a video called the Pipeline Principle. And if you look it up, it's actually on a YouTube that I had. I didn't create it, but I pulled it off. You got to look at that, because income is the first thing you have to determine how much and how you're going to make it, to determine everything else financially. It rules everything. We typically have looked at it from the bottom up. We need to look at it from top down. Income is the number one thing, and therefore we'll increase our income. And when we increase our income, we're going to want to what? Keep more of our income. So we're going to do things like budgeting, planning, and all those things. And we're going to educate ourselves, because the more harder you work for something, the more you get something in place, the better you want to keep it, right? And I think we have to be in a situation where we control our destiny. That's the true American dream. And that's what Martin Luther King wanted. He wanted equal protection under the law for us all to go after the American dream as we see it, not what someone else decides it.
That's a good point.
I like that. I think there was a lot of great lessons learned in this show. I mean,
Yeah,
I think I learned a lot about just control. Definitely control is a big one. How about you, Tay?
Yeah, I mean, just I mean, I learned a lot, especially just in terms of we have to educate ourselves. You hit a really good point earlier when you said you just got to be curious about things, because I don't think many of us is, curious about these things. We get so, like you said, with the Instagram and stuff, it's so many things that's thrown at us, and we feel like we have to do this, we have to do that. But it's like the things that matters, we actually got to go, and whether it be the company we keep or what, we got to put in the work, even for, if not just us, the generations behind us.
Sure.
So,
Yeah.
good stuff.
Okay.
Thinking about, like you said, my legacy, how I'm gonna benefit myself to earn more money, but also thinking long term about how I can put my kids in the best position possible to move ahead and advance.
Right. And if I may just say, women in finance are at such much more disadvantage. Women in business, particularly in the financial arena, we need more women and blacks in the financial arena, educating so they can see that investment in banking and all those things are we're part of that culture. And so women are a big thing and black women should definitely take the forefront of that.
Amen. Well, look, it's been a great show. I hope you guys learned a lot. If you have questions for us, please make sure you hit us up on social media. Where can they find you if they want to reach you?
Okay.
You think you can give a phone number out, whatever you want?
Yeah, I'll give you two things. First, I'm a phone guy. Text is for information. Talk is for talk for inspiration. My number, you can reach me at 301-728-7520. And you can reach me via email at md_DC_VA_project@yahoo.com.
A lot of underscores.
A lot of underscore. But Maryland, D.C., Virginia project, because we want to change this area in the areas of financial education, financial literacy, and grow it from there. Yep.
All right, awesome. And then tell them where they can find the Nitty Gritty Show.
Yeah. So of course you guys can, follow us on our Facebook page at the Nitty Gritty Show. You can follow us on Twitter at TBJ_Nitty Gritty, and also follow us on Instagram at the Nitty Gritty Show.
All right, look, it's been another great show. It's your boy, Jay DeCosta.
It's your girl, Katniss.
And I'm the one and only Tay Jordan.
Together we are
The
the
Nitty
Nitty Gritty.
Gritty.
Ray, thank you for coming on the show. And guys, we are out. Time to watch your wallets.
This is my last show in my 20s, actually. This is the last
That's
year.
right, it is.
Oh,
For both
I'm
of
like,
y'all.
man.
Me too. Yeah, we won't be back till next year.
Right.
So, hey, we signing out for the new year. And happy birthday, both of y'all coming into the
Hey.
30 Club.
Capricorn
So we're
season.
going to turn up over the next 2 weeks. And when we come back, the class is going to be a little older.
30. Wow.
Hey, we out, y'all. Y'all be blessed. It's the Nitty Gritty Show.